Hello guys, welcome back to my YouTube channel. In today's video guys, I want to teach you something that is very important guys. Something that is very important. All right, it has to do with what bias, understanding your trading bias and directional market. All right, see, a lot of traders in the industry have issues understanding how to take trade in a specific direction. All right, so this video will teach you how you can do that accurately and without finding it difficult. You'll be able to understand your directional bias like a pro guys. All right, so you know, a lot of things happened back then when I was starting as a beginner. So I was having issue understanding how the market actually move guys. Until I understood top-down analysis, my trading career changed. Top-down analysis is something very important. You see, when you consider trading from the higher time frame, for example, you're looking at the weekly time frame to understand the context of the market. All right, how market flows, what happens, and then from the weekly time frame, you go to what the daily time frame. You want to understand the current trend of the market, what is currently happening, how the market is currently moving, is it bearish or bullish. All right, you want to understand that in the daily time frame, and then going to the 4-hour time frame. The 4-hour time frame is just like a store, all right, where you go to either buy or sell depending on what your bias on the daily time frame. All right, so when you get to the store and you wait, your job is to wait for your customer to arrive. Once your customer come to the store, you negotiate with him, and what you enter or short the market or long the market depending on what the conclusion of what you bought. So that is just, it's as simple as that guys. It's as simple as that. So I want to take you through understanding directional bias, because that is a very big problem in the trading industry. A lot of traders, a lot of new beginner traders miss it all because they fail to understand bias guys. They fail to understand bias. What is bias? Directional bias. Understanding whether you're going to buy or whether you're going to do what, to sell. Now let's just say, for example, I want to go into rice business. Now I want to go into rice business. The first thing I do is to ask myself a question: how many people are into this rice business? Meaning, how many people are either buying or selling? All right, I want to know the total number of people that are buying and are also selling in the rice business. So if, for example, I have people trading rice, there are about 100 people trading rice. This 100 people is both the total number of people buying and people selling. They are 100. The next question I would like to ask is, out of these 100 people, how many people are buying and how many people are selling? So for example, if 80 persons are buying and only 20 people are selling, where should I belong to? As I'm going to the rice business, should I go there to start looking for opportunity to buy or to look for opportunity to sell? Now with that information, I know that 80 persons are buying, only 20 people are selling. It means that if I go to that rice business to look for opportunity to sell, I will make profit. Because why? Demand is high. Demand. People buying is high. So they need sellers. We need more sellers. All right. Until I come and fill up that space for more seller, I will not make profit. Why am I going to buy when 80 persons are already buying and only few people are selling? So it is better I don't do selling so that I can be able to sell my product. And not just that, if you're selling, you see that the sellers are what? The people making the decisions in the market. They are the strongest. For example, since the 20 people are only selling, they can decide to say, okay, we are selling this price of rice for 15 naira, but from tomorrow we'll be selling for 17 naira. And the buyers will be begging, so okay, please, let's just do it like this, let's just do it like this. The buyers have no choice. All right, the sellers are the ones to determine the price of the market of the goods at that time, because the sellers are what, a kind of what, depending on the buyers, the buyers are depending on the sellers at this time. All right, so that is it when it comes to what understanding market bias. Now from this explanation I gave you, it simply means that the sellers are what, stronger. They make the strongest decision. So it is better you join what, the sellers. So how can you be able to know that the sellers are stronger when it comes to what, chart analysis? Now I will take you through my chart so that you will see and understand how we do what, directional bias like a pro. Now let's go in guys, let's go to my chart. So this is it. This is my chart here. I have dots. No, let's look at near USDT. Let's look at near USDT. I think I already have a setup there, but I will clean up the chart. So we'll just analyze the chart. Okay, I will just explain. I will explain it here. I will explain it, so we know what to do with that. So this is near USD. Let's say 1 week. Let's look at the weekly time frame. Good. All right, guys. Now here on the weekly time frame, I told you guys you need to spend more time on the higher time frame analyzing the market, because when you spend more time on the higher time frame analyzing the market, you understand the context. All right, you understand what is happening. Now here on the weekly time frame, we see that price just broke structure to the upside. All right, this is the most recent break of structure to the upside. All right, this is break of structure, and then this is what the low, the swing low. All right, that caused what this break of structure. You can see the candle very massive. All right, so that is not, it doesn't mean that we are actually bullish right now. Okay, so let's understand this is just what a context. All right, just a context, just to look at what the most recent break of structure. So we want to study this move carefully on the daily time frame to understand what the market. Now on the daily time frame, let's study the move. Let's see what's happening. Let's study the move. Let's see what's happening, guys. All right, so this is it. Here on the daily time frame, we have what a change of character. Guys, market structure is very important. On the daily time frame, we'll have what a change of character, and then we'll have a break of structure. This break of structure has confirmed that this move is what valid. All right, it has confirmed our what bullish structure. We have a change of character and we'll have a break of structure saying that we are what bullish. All right, so let us see the most recent structure on the daily time frame. The most recent structure, this is the most recent structure. This is a change of character to the downside, but let's see the most recent structure that align with our bias. Remember, our bias here is what bullish. So this is the most recent structure that aligns with our bias as what bullish structure, but the most recent. So what you do is what you draw your trend line. Why I'm looking for this guy is so that I can be able to draw my trend line like a pro guy. You draw your trend line. See how you draw your trend line from the start of this move. From the start of this move, where you draw your change of character, from the start of the move, you draw a trend line to the low of this most recent break of structure to the same direction, guy. This is it here. And then when you draw a trend, after drawing your trend line, you extend it to the future. You find out that you see price keep respecting it. Price respected it here. Price respected trend line here. Price respected here. Price it kind of broke out, but keep respecting it. Retrace back. Respected it. Go back. So this is to show you that your trend line is very valid. When you check very well, you see what price respecting it, even if price broke against it. All this area you see this a little breakout is what we call what fake out. They are what fake out when it comes to what trend line. So that is it about what the trend line. After you finish drawing your trend line, then we'll have the most recent structure, this guy, and then remember we are bullish, so we go to the 4 hour to look for a bullish store. This is it on the 4 hour. Let us see if we can find good. All right, I already find what a bullish store. This is my bullish store. This is a POI. Is what an order block. My order block must have a fair value gap. This is a gap. This gap, this huge displacement that created this gap, it must have a fair value gap and broke structure to the upside. All right, that validates what this order block. So this order block is what very valid. All right, so now the order block is valid. What do? We just wait. We're anticipating that what price come all the way from this zone, this area, tap our order block. We look for what confirmation to take what the buy. All right, that is it. It's as simple as that. We are just expecting that what price do this from this area, price tap our zone, create a change of character, we take a buy from the order block, and then we move. That's it, guys. There's nothing much more, there's nothing much less. All right, so our order block should be around this area. Yes, it should be around that area. Then this we use our long path tool. I'll place our entry around this zone. This is it here. Just our stop loss will be below the order block, and then you can just target maybe 1:3 or 1:4, depending. on what we have. So this is what top-down analysis I just did. Now, like I told you, how do we understand our bias, guys? Directional bias is simple. It must be, this is the secret, two break of structure to one direction tells us what our what bias. Guys, two break of structure to one direction. This is what first break of structure. First break, guys, when drawing your market structure, please do not be in a rush. Take your time, draw your chart, make it very clean. All right, do not be in a rush, guys. So we have what two break of structure. First break of structure, second break of structure. It determines what our bias. You join this low and this side to get what your trend line. To get what your trend line, guys. So what am I saying? Our bias is simply what two break of structure to one direction. When you have a situation where we just see one break, guys, one break is not enough. One break is not enough until price do the second break. That is when we say, okay, we are actually what bullish. A change of character does not tell us that we are already the market has reversed. It is just what a signal. So it is the second break of structure that confirm what they move, guys. So you have to understand this thing, and when you understand this thing, it will help you throughout your trading career. So that is it when it comes to what choosing what directional bias. Thank you very much for watching this video, guys. If this video is really really interesting, and if you learned something from this video, please do it to subscribe, like, and share. God bless you. I love you.